Before we get started, I did want to quickly have everyone check their microphones to make sure they're working properly. So I'll start with appellants. If you could please press the button in front of you and speak into the microphone just to make sure it's working.
Hello.
Good.
Hello.
All right, and please remember to mute yourself when you're done talking. And Franchise Tax Board?
Testing.
Perfect, thank you. Okay, so as a reminder, this hearing will be available on OTA's YouTube channel. Since we are ready to begin now, I'm going to go ahead and stop and ask that the recording please be started. Okay, and looks like we're good to go. I got the go-ahead. So my name is Cheryl Aiken. I am the lead administrative law judge. On the panel with me today are Kenneth Gast and Sarah Hosey. So this is the hearing of Appeal of Kassel, OTA case number 180-10965. Thank you for everyone for making it here today. We are not on the record yet, and I'm going to go over just a couple of housekeeping items. So again, on the panel with me are Judges Sarah Hosey and Kenneth Gast. While I am the lead for purposes of conducting the hearing today, all three administrative law judges are co-equal decision makers. So also present with us today is our stenographer, Ms. Chung, who is reporting the hearing verbatim. To ensure we have an accurate record, we ask that everyone speaks clearly and loudly. When needed, Ms. Chung will stop the hearing process and ask for clarification. Please speak one at a time and do not speak over each other. And please remember to use your microphone and mute yourself again when you're finished. After the hearing, Ms. Chung will produce the official hearing transcript, which will be available on OTA's public website. The hearing transcript and video recording are part of the public record. Again, to speak, please unmute the microphone in front of you and remute it when you're finished. Finally, please remember that these proceedings are broadcast on our YouTube channel, and any information shared during the hearing will be heard and or viewed by the public. With that, are there any questions from the parties before we go on the record?
No, Judge.
No, Judge.
Okay. Thank you. And my co-panelists, are we ready? Okay, and Ms. Chung? Okay. We are opening the record in Appeal of Kassel, OTA case number 180-10965. This matter is being held before the Office of Tax Appeals. Today's date is Tuesday, February 14th, 2023, and the approximate time is 9:39 a.m. Again, my name is Judge Cheryl Aiken, and I am the lead administrative law judge for this appeal. With me today are administrative law judges Sarah Hosey and Kenneth Gast. As a reminder, the Office of Tax Appeals is not a court. It is an independent appeals body. The office is staffed by tax experts and is independent of the state taxing agencies. With that, let me please have the parties introduce themselves for the record. If you could also spell your name for our stenographer, that would be appreciated. And I'll start with appellants.
Mortimer, Mortimer, Lasky, Laski, attorney for the appellant.
Anthony, Anthony, Glass, Glass, attorney for the appellant.
Okay, thank you. And Franchise Tax Board?
David Hunter, Hunter, on behalf of FTB. Good morning.
Okay, thank you. As confirmed at the pre-hearing conference and in my minutes and orders that followed that conference, the issues to be decided in this appeal are: 1, whether appellant's reported sale of stock in Flexicizer, Inc. during the 2007 tax year had economic substance beyond tax considerations, and 2, whether appellant is entitled to the reported capital loss in the amount of $2,228,000. This second issue includes sub-issues of whether appellant has substantiated his reported basis in full or in part in Flexicizer, and whether appellant is entitled to any loss or deduction during the 2007 tax year for loans or advances made to Flexicizer prior to the reported sale, which amounted to $809,937 by the end of 2007. So, Mr. Lasky, is this consistent with your understanding of the issues to be decided?
Yes.
And Mr. Hunter?
Yes, Lead Judge Aiken.
Thank you. All right, with that, I'd like to move on to the evidence in this appeal. I'll start with appellant's exhibits. I do have the document you submitted. I'll get to that in just a moment. Before I do, at the pre-hearing conference, we noted that appellant had 28 exhibits, labeled appellant's exhibits 1 through 28, which would be admitted into the evidence at the hearing today. In preparing for the hearing, I did note that there was actually a 29th exhibit that was submitted with the pre-hearing conference statement. It just looks like it was omitted from the index. So I just wanted to double check with appellants and see if the intention was to have that admitted as well.
Yes, it was, Your Honor.
Okay. And Franchise Tax Board, did you see that exhibit? It's Exhibit 29. It would have been the last 2 pages of the exhibits appellants submitted with their pre-hearing conference statement. It is a letter that is dated January 11th, 2014 from Greg Wallace, CPA, to FTB's protest hearing officer. It was also appellant's Exhibit A with their reply brief.
I thought I saw it before, Judge. We have no objection.
Okay. With that, then, we will be admitting appellant's Exhibits 1 through 29 without objection, and those are now admitted into the evidentiary record. Franchise Tax Board, let me back up. With respect to the document that was provided this morning, Mr. Lasky, could you clarify whether this is intended as a visual aid for your presentation today, or is it intended to be admitted as evidence?
It's primarily meant to be a visual aid, Your Honor. It could be used as evidence, but it's no more than a summary of what's been written the last 4 years.
Okay. And Franchise Tax Board, did you have any objections to the use of these documents as visual aids during the presentation today?
I have no objection, Lead Judge Aiken. As a matter of fact, I believe the last 3 pages we've already seen.
Yes.
So no objection.
Agreed. Okay, thank you. We will use that as a visual aid during the presentation today, so thank you for that. Franchise Tax Board, it looks like you had Exhibits A through I. At the pre-hearing conference, appellants did not have any objections to those exhibits, so FTB's Exhibits A through I are now admitted into the evidentiary record. And just checking, there are no additional exhibits from either party?
No, Your Honor.
No, Judge.
Okay, thank you. So last, before we jump into presentations, I was going to quickly go over the order of the proceedings today. So appellants will have their presentation first, and they have 25 minutes for that presentation. Following appellant's presentation, I will turn to my panel to see if they have any questions for appellant's representatives. After that, Franchise Tax Board will have time for their presentation, which has been estimated at 20 minutes. Following FTB's presentation, I will again turn to my panel to allow any questions of Franchise Tax Board, after which I will allow 5 minutes for appellant's rebuttal or closing statement. Following that, I will have a final opportunity for questions the panel may have for either party before concluding the hearing. Any final questions before I move on to the presentations?
No, Your Honor.
Okay. Well, then I believe we're ready for appellant's presentation. Mr. Lasky and or Mr. Glass, you have 25 minutes and may begin when you're ready.
Okay, I think it's appropriate, since it's a holiday, to wish you all a very happy, healthy Valentine's Day. Enjoy. You too. It's okay. What I did was, I was in bed the last couple of weeks, and I just kept looking over the papers, and I realized that in going over the papers and everything that's been written, there are certain very key points that have never been mentioned. And I'd like to bring them up for your consideration today. I will start. I'd like to talk about Greg Wallace, the CPA. Greg was appellant's accountant for 20 years. He filed his tax returns, maybe longer than that. Greg was the accountant for Flexerciser Inc. since its inception. Greg was the representative during all prior audits and hearings. And he spoke for Arthur Arthur had no input to this at all. We'll get to that. Greg was a 1% owner of a medical company called Camor, which he owned with Dr. Sheldon. I think they're in this building, by the way. And Dr. Sheldon Zinsberg owned a very substantial portion of Camor. And they sold Camor for $240 million in 2007. Now, Greg, we're going to leave Greg for a moment, and I want to go to Arthur Kassel. If Arthur has a quality, and I knew him when he owned the Beverly Hills Gun Club, and he was a narcotics agent for the state. He is a very loving man. He was married to Teachie Wilkerson for 20 years. She owned the Hollywood Reporter. And when she came down with Parkinson's, he was totally devoted to her. He would be in the pool with her, walking with her. And when he saw this Flexerciser machine, which it was crude at the time, when he saw it and used it with Teachie for a year or two, it really started to help her Parkinson's. Unfortunately, at the end of the year or two, she died. But Arthur had this phenomenal love, not for Teachie, but for humanity. He wanted this company to go on to help all people with Parkinson's disease. Now, the 4 years that Arthur owned this, 2004, 2005, 2006, and 2007. What did the company do? Well, in 2004, it lost $647,000. In 2005, it lost $598,000. In 2006, $943,000. 2007, $638,000. How much of those millions of dollars of corporate losses did Arthur, as an owner and paying those bills, how much of it was that he was able to deduct on his tax return? Zero. Do you know why zero? Because his longtime accountant kept the company as a C corporation. And I don't think it takes more than somebody a year out of college to know that if you want to have a deduction from a C corporation at the beginning of the year, convert it to an S. So Arthur never converted it. First year, second year, third year, fourth year. Then we come to the year of sale. All of a sudden, Camor has a lot of money. And Greg has a conversation with the other owner of Zinberg, Dr. Zinberg. And he says to him, would you like to add this on to the company? We could bring the machines on, we could do a lot more development with them. And the doctor said, that could be a great idea. So what happened? Greg goes back to Arthur and makes a bid, be it a paltry bid, but he makes a bid to buy the company for $100,000. And as soon as he got in, he had to put in $50,000 because they had no working capital. The sale goes down. A few days later, Dr. Zinsberg says to Greg, I don't think it'll be such a good image to have all those people in wheelchairs on the exercise floor. Cancel the deal. So a few days later...
I'm so sorry to interrupt. Can I have you move your microphone a little closer just to make sure we're picking up
I'm
the sound for
sorry.
the recorder? My apologies for interrupting you.
I've never been told I'm so quiet before. A few days later, they cancel the deal. Now you look, what does Arthur have to sell? He has nothing. He has net operating losses. What about the patent to the flexerciser machine? Who owns that? The original inventor, Arthur, was such a terrible businessman. He never had the patent bought or signed over to the corporation. See, he didn't even have that. Now, why would Arthur take the company back? Because Greg said to him, I'm going to close it if you don't take it back. And when he took it back, what do you think happened then? Well, in 2008, Arthur ran it and lost $1,488,000. In 2009, he lost $851,000. In 2010, $1,119,000. 2011, $1,154,000. 2012, $1,248,000. 2013, $152,021, and 2014, $363,024. Needless to say, Arthur was not a businessman. He was in love and tried to provide a product. He wasn't even taken advantage by Greg. When the sale was made, when Greg made the offer, he had Dr. Zinsberg behind him, and they had something of value to buy that equipment with. There's not an argument about it. That's what they canceled a few days later. So at the time that the sale was made, there actually was a sale made for value. You don't look at the second sale where he canceled it and say, oh, the sale was not made for value. Well, I think it's important to mention or repeat that the only thing the Franchise Tax Board heard during the audit, during the appeal, was from Greg Wallace. They never heard from Arthur, which is normal. He was his accountant. He knew everything that was gone on his return. He was the representative during all the prior audits and hearings. Greg was the leading person involved in this case. I'm not pointing a finger, but I think the finger points itself. At this, I wrap it up.
Okay, thank you. And I take it that concludes your presentation for the time being?
I think so, yes.
Okay, we'll come back to you for rebuttal after Franchise Tax Board. I just wanted to make sure before I turn to my co-panelists for questions.
Thank you.
Judge Cass, do you have any questions for appellants?
I do not have any questions. Thank you.
Okay, and Judge Hosey?
No questions, but thank you.
You're welcome. You're welcome.
Okay, I do have one quick question. I was wondering if you could clarify for me when Mr. Kassel repurchased Flexicizer from Mr. Wallace. I know it happened sometime early in 2008, I believe, but I don't know that we have the date in the record.
I can't say for positive, but I think it was just a matter of days. Dr. Zinsberg changed his mind and did not want to be bothered with it. So they had the sale, then they canceled the sale.
Okay, thank you. That's my only question for the time being. So I think we are ready for Franchise Tax Board's presentation. Mr. Hunter,
Good.
you have 20 minutes, and you may begin when you're ready.
Sure, we won't need that, Lead Judge Aiken. Thank you for the time. My name is David Hunter, and again, I represent Respondent Franchise Tax Board. And this case involves a complete and total lack of substantiation. Appellant reported a $2.2 million loss on his 2007 income tax return. And when audited, and even until the present day, appellant remains unable to support his claimed tax basis in this transaction as reported on that return. The law is clear. Appellant must support his basis in the stock as claimed. If not, the taxing authority can reduce the basis all the way down to zero. As appellant failed to support his reported tax basis, respondent correctly disallowed the reported loss, and its action should be sustained. Here's what happened. In 2007, appellant sold commercial real estate located in Hollywood, California, and realized a gain of $7.5 million on this transaction. Appellant also owned a majority interest, an interest in a company called Flexicizer, which became an 83% interest toward the end of 2007. He sold his stock to his longtime accountant for $100,000, but he claimed a tax basis of $2.3 million in the stock. A respondent asked appellant to provide support for his claim to $2.3 million in basis in this stock. Why would he ever sell stock reported with a basis of $2.3 million for the low price of $100,000? That was the question posed by respondent in order to ascertain whether or not there was economic substance to this transaction. First, appellant claimed that he purchased $1 million in stock from Flexicizer. He argued that he had equity in that amount, but he could not show that he paid for the stock or that he was even issued said stock. We later received a stock certificate with 2.1 million shares. He offered a Flexicizer stock ledger with handwritten notes and entries. He also submitted checks that he wrote to Flexicizer. That's in appellant's Exhibit 1. But these checks do not correlate with the entries on the ledger. Majority of the checks have a memo line at the bottom which read loan, payroll, or per agreement, which does not reflect the purchase of shares of stock in the company. Appellant also failed to provide any stock purchase agreements or corporate minutes to tie these checks to the payment for his Flexicizer shares. So there's a complete and total lack of substantiation on this point, that being equity as basis. Next, appellant claimed that he loaned a little bit over $1 million to Flexicizer, but he could not substantiate that he actually provided the $1 million in cash as claimed. The actual number is $1,065,000, and he did not report receiving interest from this alleged loan from the company. So recently, appellant argued that the shareholder loan balance of $809,000 that's listed on the tax year 2007 return, that should be the basis for his stock in the company, because it's a line item that's on the balance sheet. However, appellant was not the only shareholder in the company, and we don't have information in terms of how much of that $809,000 was a loan that's outstanding to appellant as the shareholder. And there are no documents to support the existence of that loan. So again, there's a complete and total lack of substantiation on that point, that being the loan, that being the sub-issue that we were discussing, the amount of $809,000. But in addition to the audit issues, appellant could not provide a valid business purpose for this transaction, and that the transaction I'm referring to is the sale of stock with a reported tax basis of $2.3 million for $100,000. Appellant could not explain why he sold his stock to his accountant for less than 4 cents a share, when just days before he stated it was valued at 50 cents a share. That represents a decrease of almost 93% of the acquisition value with no material changes in business operations of the company. Also, we've heard the term paltry sum this morning. The appellant could not show how he arrived at $100,000 as being fair market value for the stock or the selling price for the stock when Flexicizer was still operating for years. I mean, we have it operating up until 2016, I believe, and the year it issues 2007. So respondent properly found that this transaction lacked economic substance because there was no credible business purpose for this transaction. It wasn't like the company was worthless. We have testimony here that another medical company was interested in the stock. We don't have facts or an explanation as to why appellant did not sell the stock to Mr. Zinberg directly and why he had to work through his longtime accountant. And I looked at an exhibit here. It's appellant's exhibit. It is a prospectus. And it's at page 10. And that's dated May 1st, 2008, because Lee Judge Aiken had it.
So sorry, can you specify the exhibit letter or number that it is?
I'm sorry, Lee Judge Aiken.
Totally
It's
fine.
Exhibit 10.
Exhibit 10? Okay.
Yeah, my tab flew off because I got animated. But at page 12 thereof, I understand it's a prospectus. But you issue a prospectus if you believe that you have something to sell that's worth value. And they were going to raise several $1 million for this company. And so again, it's if the position is the taxpayer had something worth $2.3 million, but sold it to his longtime accountant for the low price of $100,000 because he had no option, well, there were options in the mind of the taxpayer in the following year. So, again, same tax year, earlier in the tax year, $7 million gain due or resulting from the disposition of the sale of commercial real estate. And at the end of the year, we have this transaction which gives rise to this appeal. Respondent correctly found that this transaction lacked economic substance. Also, the audit issues have not been addressed. So on this record, we believe that respondent's action should be sustained. Thank you.
Okay, thank you. Let me turn to my panel. Judge Gass, did you have any questions for Franchise Tax Board?
I had one question. So it's pretty clear, unless I'm wrong, that the company was losing a lot of money. So is it unreasonable to sell the company for $100,000 in 2007? Your thoughts on that?
Yes, our thoughts are, yes, if it's losing money, it continued to operate. And it was still valuable because, well, again, it continued to operate for years thereafter. So it wasn't worthless. It wasn't like he, again, one argument was appellant made loans to the company. Well, he didn't take a bad debt deduction. There's no facts here that shows that he wrote the whole thing off and said, I'm walking away and I'm going to take a bad debt deduction on my personal income tax return. No, he stuck with it. And he had a rider when he sold the stock, the 2.1 million shares to his longtime accountant. There was a rider that allowed him to repurchase said stock, $4.2 million shares of the stock. So if something's worthless because the company's hemorrhaging cash, it doesn't follow that you would retain strings on it and then set yourself up to become the major shareholder once again.
Thank you. No further questions?
Can I ask just a clarifying question on that? You said when he sold it that it had a rider that allowed him to repurchase that. Was that in the sales agreement with between appellant Mr. Kassel and the purchaser Greg Wallace, or is there something else you're relying on for
I'm
that?
relying on something else, Judge, and forgive me, I can take a break and find it, but it was more of a corporate document where when this transaction took place, appellant was also issued the option to repurchase 4.2 million shares of stock in Flexicizer.
So directly from the corporation then is your understanding?
Well, there was a rider on the stock that was sold.
Okay. Thank you. And Judge Hosey, did you have any questions for Franchise Tax Board?
No questions for me. Thank you.
Okay, looks like we don't have any further questions for Franchise Tax Board, so we are ready for appellant's rebuttal or closing. We've allotted 5 minutes, but you also didn't use all of your time from your initial presentation, so if you do need a little more time, that should be just fine. So you may begin when you're ready.
No, of course not. Mr. Hunter.
Sorry, can I have you turn on your microphone and make sure it's
Hello?
close?
Hello?
I think that's
Go over there. Hello?
sounding better. Thank you.
Okay. When you look at the operating results I gave you, from 2008, when he was required to take the property, the corporation back, all he did was have net operating losses of $8.5 million. They own nothing. They did not own the Flexerciser. It had no value. The only value Flexerciser could have had was if Dr. whatever his name was, if Dr. Zinberg would have gone through with the deal and they would have put Flexerciser on the floor, that would have been a savior for it. I hate to say, but Arthur would have suffered all the losses. I know you can't carry back that far, but this is the most hopeless. This is like looking at the Titanic and saying, my God, where are we going to take it next? This company was dead. The only life this company had was the hope that Dr. Zinsberg would buy it. When he made the offer, that made the sale legitimate. He put in a legitimate amount to put the Flexerciser on the floor. Until he changed it, it had died again. By the way, who did the Franchise Tax Board talk to strictly? During the audit, during the hearing, during everything. They never once spoke to Arthur. Arthur, you could put anything in front of his nose, he'd sign it. He's not a businessman. The last I saw, he was chief of security at a mental institution. Arthur always worked for the state. He just, out of love, he wanted to see this company go. And he went through his entire amount of money. And his accountant that should have watched over for him did not watch over for him, but saw that he went through every penny he had and did not even get a deduction that he would have been entitled to. And then if you're going to take Greg Wallace's word on anything, I don't know what to tell you. I mean, you can see the man was, I hate to say it, everybody in this case is related to me. Greg Wallace was, when I was in the master's program teaching income tax of estates and their beneficiaries, he was in the class. T.G. Wilkerson had someone working for her back in the early 2000s. He got me to be her accountant. I got to know everybody a little bit, but I didn't know that Greg would make up such stories. And it just shocks me that he handled the entire audit, and I hear what's being said. It's not true. And maybe it'll just have to be determined that way at the next level. But it's not fair that Arthur suffers like this. I have completed it.
One thing to add, of the cost basis.
Could I have you just move your microphone closer? And yeah,
Oh, sure. Okay.
There we go.
sure, one more thing to add about the cost basis. We did provide checks and wire transfers. That was in our Exhibit 1 to our pre-hearing conference statement, which references our prior briefs where a lot of checks and wire transfer documentation was provided.
Thank you. Okay. Does that conclude your closing?
Yes, it does, Your Honor. Thank you.
Okay. And let me quickly turn to my panel again to see if they have any final questions for either party. Judge Gast?
No questions, thank you.
Judge Hosey?
No questions either. Thank you.
Okay, I was going to turn to Mr. Hunter. I believe you were looking for maybe the document you referenced.
Yes, Lead Judge Aiken. And just for clarity, I found what I was referring to at page 2 of Exhibit D to respondent's opening brief, so it should remain yes. And again, what I was saying was that appellant was issued 2.1 million shares, and these were the shares that were sold to his accountant, but also with a right or an option to repurchase double that at 50 cents a share with a 5-year term. So, again, they were valued at 50 cents a share. This is November, but sold at 4 cents a share in December. So that correlates with that part of the argument. Also, these 2.1 million shares were issued in order to cancel a debt of $1,065,000, but we didn't have substantiation for that. Now, there were some checks in Exhibit 1, but again, these checks had different connotations on the memo line, so they weren't accepted. But I'm sorry, I just wanted to tie that up for you, Judge. I felt that I owed you that.
Okay, thank you. Let me just check with appellants because I always like to give the appellants the last word. Did you want to respond?
I would like to know who drew that document. Arthur worked for the company from the very beginning. The CEO, he lost a $1.7 million lawsuit for fraud, and the attorney for the company got fired and had to give back all his stock. So it was one of those two, or Arthur, or Greg rather, that wrote that document. Anyone that, if you could lose $10 million and not have a penny left, you have to be a hell of a salesman to sell that company. That's it.
Okay, thank you. Any final questions from my panel? Okay, looks like that's a no. Anything from either of the parties before I conclude the hearing today?
No, Judge.
No, Judge.
Okay. Give me just one moment. Okay. With that, we're ready to conclude the hearing. I want to thank both parties today for their presentations and for their time. I know it was a little while getting to hearing on this one, so I appreciate everyone making it here today. The panel of administrative law judges will meet and decide the case based upon the arguments and the evidence in the record. We will issue a written decision no later than 100 days from today. The case is submitted and the record is now closed. This concludes this hearing. Our next hearing will reconvene at approximately 1 p.m. Thank you, everyone.
Thank you, Lead Judge Aiken. Thank you, Judge Gass. Judge
Thank
Hosey.
you.